We were in positive territory. We're up around 0.6%, and now are subsequently flat at this point in time. It seems that markets are kind of divided in terms of which direction to head. Do you think we could head into the red or perhaps green in today's session?
Well, first of all, I was quite surprised when the market popped up. It's popped its head up this morning as it did. It was quite surprising. The rand was stronger. We couldn't find any reason why these markets had bounced, and so not surprising they have given back their gains. As you said, we are flat. I expect the markets to be pretty subdued for the next couple of days ahead of this referendum in Greece. I think it's all going to hinge on that. I don't see how the Greeks can't pass it, but I think the market hates uncertainty. We have had a big move up to the upside at the back end of last week, and we've given back a lot of it in the early part of this week. So my feeling is we're going to tread water, and we're going to remain around these levels for the next couple of days.
Richard, are you putting any bets in place? Are you trading according to what your view is with regards to the referendum that is going to occur on Friday? Because if we hear a no, that could be quite interesting with regards to future scenarios. And I think many people haven't actually started extrapolating some of the possible issues that could come to the fore. If they say yes, then more positivity perhaps. Is there any specific trade that you're embarking on?
No, not really. I'm personally very, very light in these markets. We're seeing across our clients as well. They did a lot of selling at the back end of last week. Anyone that wouldn't have been selling into that rally would have to have their head read. And yeah, I think guys are really going to sit on the sidelines into this week, especially to see what happens, and then move forward into next week.
Okay, but if you're a long-term investor, then perhaps you just need to look away. And hold
if you're a
on.
long-term investor, you're still holding anyway. So.
Absolutely. Let's touch on the banking sector. We've had two pieces of news out today. Let's touch on Nedbank. We spoke on this with Patrice Rousseau a short while ago. We're starting to see some positive numbers coming through from Nedbank. Are you impressed with the numbers? The net interest income has increased by around 15% or so.
Yeah, certainly. I think the net income has increased, and it's going to continue to increase. They seem to have bad debts under control. Just having a look at what our analyst estimates, he actually has it as his top banking pick with about 165 rand target. So yeah, certainly if you want to be long a bank, an SA bank, certainly Nedbank would be the bank to be long.
What about the likes of Capitec, and also embarked on a capital raising exercise, if I could call it that, raising around 798.9 million rand via share issue. A little earlier this week we spoke to a few investors, and they were really concerned about the dilution of the share price. What is your view? Do you think that the share price will recover going forward?
Well, I think Capitec, number one, has had a tremendous growth spurt. I mean, if you'd have a look at the share price, I think it was trading about 80 or 90 rand a year ago, trading at still about just below 180 rand, even though it is off its highs. I certainly don't think Capitec can continue to grow from a share appreciation point of view at the rate that it has grown. It's certainly going to become a little bit more investors are going to become more circumspect as to where the share can go from here. It's certainly not the cheapest bank out there. You can buy Standards, Absa's, Nedbanks at far cheaper. So I would be certainly tempered in saying that we could see Capitec at 300 rand in a year's time. I think a lot of the growth has actually come through, and I would say that I would be looking at the more developed, established banks which have lagged the market compared to Capitec.
Yes, exactly, and lagged the market, and for a couple of years now that we still haven't actually seen them recovering to the pre-crisis levels. What is your thoughts with regards to that, and are we going to start seeing significant double-digit growth like we saw in the heydays, or is Basel III and increased regulation within this industry going to keep the lid on possible extensive gains?
Well, I think you have to look at our banks in looking at them compared to their peers overseas. If you have a look at what, say, a Standard Bank or an Absa or a Nedbank or a First Gen have done compared to a Deutsche Bank or a Bank of America, we've way outperformed those banks over the last 5 years. No question. Even a Goldman's has way underperformed our banks. So our banks have had a pretty credible performance in relation to the other banks and in relation to what's been going on in the world. I think that the regulatory environment's here to stay, and the Basel requirements are here to stay, and maybe get even more stringent. So yes, exceptional growth in banking stocks probably not going to happen in the next couple of years, but certainly I would expect them to maybe push on from these levels if markets settle down.
Richard, when we look at what's happening in the US, of course, we've got a lot of economic data coming out this week, unemployment, and of course the FOMC meeting to be concluded later today as well. But we've also had quite a few earnings. Pfizer coming out better than expected numbers, the likes of GM and even Toyota coming out with better than expected numbers. Credit Suisse, for example, came out with bad numbers. So pretty much a mixed picture coming through from Europe and the US. What is your assumption with some of the numbers that have been released?
I think corporate earnings out of the US have been pretty good. I think they've beat the street on a lot of the companies have beat the street, and I really think that that's the engine room for global markets. I certainly think that our local companies are still producing good numbers, and that's always going to provide an underpin. When these markets do get sold off on European or US woes, you can see the buying come in, and there really is a floor under these markets when things are bad. So I think that as long as corporate earnings growth remains there and corporate results are beating estimates, I think that the markets will be okay. That's not to say if the referendum in Greece doesn't get through that the markets won't come off, but I still think when the top 40 goes down to that 26,000, 26,500 level, what's keeping the market up there is, and keeping it not falling through those levels is the corporate earnings.